Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to be reviewing the London and US market opens on the pound USD, the euro USD, and the pound Aussie. Again, we've been going over some really simple concepts, and the purpose of these videos is just to show how some of the recurring themes of the London Open with order flow and the Asia close, how the London markets can offer some good opportunities, how some days are maybe messier than others, and it may be either a good day to stand aside, or also maybe there are some range days that set up where you can have some lower risk opportunities if you stand back and just look at some simple support and resistance setups. So just looking again, just reminding you that pink is the Asian session. We've got the yellow for the Europe Open session mainly until the US Open, and that's the blue box here as well. Excuse me. So again, as we've said, I'll tend to just mark off the Asia high and low. Now in this particular case, we look at Asia and we see that Asia was trending downwards into the open of the London session, and often, you know, obviously we expect to see some kind of response in the open of the London session. We're not necessarily looking to trade that, but what we are looking is for the market to give us some indication of either trying to trap traders or perhaps a direction of order flow. So traders would maybe look at this and automatically start to assume that they're going to look for a short entry, and immediately London opens up and tends to pull back into range inside of that 20 period moving average. But then again, we see that roll over, retest the lows. Now, one of the things that we talk about is that between the hours of 2 a.m. and 5 a.m. New York, that the market will often establish a high or a low for the session in terms of a buying extreme or a selling extreme. So we tend to pay particularly close attention to the top of the hours, because those are the time frames when we may see a new low or a new high take place, especially as we close in that 3 hour session. So we can see here that the market definitely took out and made new highs, except that if you're going to be shorting this market, you want to be careful that you're not shorting into a moving average. Now again, we're not necessarily trading with the moving average as a trading signal, but we're just looking for some indication of bias. And when you get that many bars above the moving average, you want to look to either again be buying low in an uptrend or selling high in a downtrend. In this particular case, the market is making new highs and new lows. Now, until we see that market dive down hard and take out the low, which is at approximately 530-ish in that range, so we're potentially looking at this area as a high for the session, or this area as a buying low for the session. As soon as we see that market come back inside of the moving average after retesting the low and giving us the wick, traders want to be positioning themselves somewhere in that bullish direction, because we know that the market potentially is going to at least retest the London high. But as we see here, we saw it go back to the other side of the Asian session. So again, you're always looking once the market sort of established itself, unless we see some very clear-cut direction of a strong trending day, which we saw that immediately pull back into the London Open. So we're looking for two-sided trading, and then we've now got an area where we can either buy low or buy back in with the trend when it's on its way to retest one of the extremes. Now into the US session, the market established what we would consider to be possibly a failure pattern once it traded below that last leg up in the London mid part of the London session. But again, as the US opens up, it retested that high area from Asia where Europe went back and we found more selling pressure above. Then it drove back down on top of that area. So we suspect that, again, if you want to buy low or try to sell high. But again, there's no clear direction until later in the evening. There was some news that was released, but in terms of simplicity, you're looking at a range of roughly 20 pips, and that's where it gets harder, traders. As you can see, there's a bit more volatility You don't want to get trapped anywhere inside of that range. You're in the middle of the profile, and you're going to get chopped up, and it's a very low reward risk ratio. So not the clearest of days, but again, off the London Open, you want to look for some direction of order flow. So we saw that bullish direction, but we want to always be aware that the market is going to possibly retest one of those extremes, but you want to be trading in the direction of that bias. Okay, so let's take a look at the euro. Now again, a little bit different day. Asia had a bit of movement in that last few hours for the euro. So again, we had a nice range established. We mark off our high and our low for the session, and this is kind of what you want to look for. These are nice clean candles into the open of the London market. We see 3 thrusts up. You see the 3 bull candles, so we see 3 thrusts up against the trend. It retests the low and immediately pulls back in. So we want to see that weakness retest the low and then a bullish reversal. So traders who were savvy to that would have saw that bullish candle present itself. We see the market do a strong leg up. Then we see a weak pullback. Once the market starts to swing, traders want to be either looking to go to break even or even consider taking some profit. Until the market retests that upper border, we still don't know if this is just going to be a range day between 50 and 75. But as the market opens into the US session, it had gradually crept higher, and this is a beautiful marginal new high false break, which is technically not a correct term. It is a break, but it's a marginal new high, and then immediately retests. Now savvy traders would have looked to have entered in somewhere in that midpoint where it's going to retest that low. Definitely even on the breakout traders coming in here, a very weak pullback that left a small tiny gap, another indication that that's going to slam down and start to accelerate. Traders had another entry where there was weak consolidation, so we've got traders selling one tick above those bull stops, and also traders selling below the bull stops at the lows. So good opportunities on the euro, nice movement throughout the US session. A little less crystal, bit more of a creeping trend in the London session, but again, a nice setup where the market presented an exhausting pattern, immediately retraced. That weak pullback was a clue where traders had the opportunity to get in low and possibly trade to the other side of Asia. Looking at the pound Aussie, again simple, just let's mark off our highs and our lows, and as I've said before, if we see a market that's trended up, one of the things I will look at is 50% of the range is potential support, and interestingly enough, into the London Open we saw the market come off of a 3 thrust topping pattern. It retested that 50% level right off the open, and traders who were savvy would have looked for that retest and failure to get in short. The next obvious target is going to be Asia's lows, and we've got a measured move extension of that first leg presenting itself down to the lower side. So if we take that leg of movement down from the low, it's almost an exact extension from the Asia session, another 50% down. So great opportunities for traders on the pound Aussie. Now again, sometimes you're not going to get all these trades, but it might be opportunistic for you to keep 3 or 4 of these charts on your screen. Look for how they've set up into Asia. You want to be looking for stuff like this 3 thrust pattern. It hasn't gone any higher. It's made 3 attempts. So we've got our 50% level, and beautifully on the London Open it gave us a really nice indication. Bulls would have been looking to possibly see another leg up, but when we saw that fail below 50%, we saw the bears pile in, and they came in strong, and even with breakout traders coming in below there, and it just accelerated downwards. So hopefully you got some value out of that, traders. Look, we're not looking at other time frames. We're looking strictly at price action. I believe that if you keep it simple and you keep your risk management tight, you can see with all of these trades, each of these markets has roughly 25 to 50 pips as a maximum stop loss. The pound crosses with the exotic crosses are larger volatility. Their ATR stop will be a little bit higher. Their reward will be a bit higher. So if you're prepared to take on that extra risk, there is a greater range. But you've got to be savvy. You've got to pay attention to the price action. You're not going to get everything right, but again, when the market turns and if it's not going in your direction, take the smallest loss possible. Get out. Be nimble. Be quick. Keep your trade set up simple. It's easier to just have a simple plan when you get onto the screen. Timing is paramount, and keep your downside minimized. So hope that adds value for you, traders. Study hard, print off a lot of these charts, go back through manually and mark these off. Look at your time frames. Again, that iSessions indicator is free. Just Google it. I just adjust my times. So the main London Open 2 to 6 up until the U.S. Just before the U.S. Open, I want to see where the market's establishing areas of potential support and resistance and how they open up into the opens. Thanks, traders, and may the markets go with you. Hi, traders. It's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.